What's good, everybody? Welcome to Fomc 917. We're about to run through the entire day of price action. We're going to look at the Fomc setups. There was two really nice short setups in my opinion. So without further ado, I'm just ready to hop straight into them and really look at how Fomc actually impacts the market when it does decide to come out. Let's get into it. All right, so hopping on, let's just clear up the charts and move into our whole top-down analysis for the day, right? So bigger time frame, daily time frame, we have been very bullish, right? And in the last pretty much the last day, right, we started to see some push lower, right? So if we look, 1 hour time frame yesterday started to push lower. This was yesterday. So we closed the market lower with now displacement through these lows, getting down to this piece of generated liquidity and running through this little imbalance up here. So now that validates me to, is at the very least, go ahead and see a setup or some kind of trade on NQ over here down to this imbalance, or go ahead and see something maybe down to take this low, or maybe even one of these lows down here, right? So I'm looking now kind of with a little bit of a bearish bias. I'm wanting to see if we end up going ahead and respecting this 4-hour imbalance. So I'm going to quickly draw this out right here. This is going to be my bias builder, right? So if we run through this, I'm looking to now be bearish to go run through and take the rest of this generated liquidity. However, if we hold it, it's telling me that we probably don't want to go take all that generated liquidity. So I'm not going to really look to take a short all the way down to those lows. So that's really my bias builder, right? And understanding that is really good because it allows you to understand what PD arrays are getting respected and what are not getting respected, right? So when I see that fair value gap get disrespected, that tells me we now want to go ahead and reach for lows, right? So that's a super strong tool to have if you know how to use it. So coming into the day, let's look at 2 points in the market. I want to look at market open, and I also want to check out how FOMC looked, right? So at this point, what we had done is we're kind of in the area where now we can either hold on to this fair value gap, seeing some kind of internal manipulation to get bought back up to these highs, or we can look to see a turtle soup, and then if we get a setup to the downside, we can look to trade to take internal liquidity, right? Just simply looking at this model. Let me zoom in to 30-minute. I think it's a little cleaner. So yeah, right here, recognize the model. That's the biggest thing, right? So right here now, we can see if the sell model wants to continue down to the lows, we can see something like this where we come up, soup that internal high, and then see a setup to the downside to look to just kind of trade some type of internal liquidity. However, if we don't get that, right, we can always look to see on open a sweep of that low down here and then a look to trade back up to take some of this generated liquidity. So I'm watching to see which direction the market wants to go on open. So you guys know that on FOMC morning, I usually don't like to take setups because it's just facts that the market's really just going to be waiting for the FOMC release, because that's when we're going to get to see the biggest movement, all that good stuff, because everyone's waiting. All the market participants, the big banks, they're all waiting for that number to come out so they can adjust their portfolios, do what they have to do, understand where they want to move price in the coming days, weeks. So that morning, we're usually just going to see a little bit of consolidation, really not much, right? So market opens right at 9:30 as always. And the setup wasn't even that bad. I'm going to keep it a buck. We end up seeing a bit of internal manipulation. Now, if I want to see total soup and get an area which I want to expect to reject, I want to see this whole high get taken, right? Maybe we could play off an internal high if we had to, but I'd really like to see this high get taken, right? So drawing the same two highs out over here on NQ would be right here, and then also right here. Yeah, right here. So on open, I want to see one of those two highs go ahead and get taken out. So we see over here on NQ, we come up and we take the first one right at 9:30. Yeah, so at 9:30 we come out, take that first one, and we start to see some kind of delivery to the downside. Where on ES over here, or sorry, NQ over here, we don't end up taking that high. So we put in a bearish SMT right there, and we don't end up revisiting all the way until this point right here. So this was a pretty clean setup in my opinion. We start to immediately dump, and there really wasn't much entry opportunity unless you just took it a market order off a change of the state, or maybe you got some kind of fair value gap or just market ordered within here and got in this really nice leg down. That was good in my opinion, but the setup that I really liked was after we saw more price action start to play out, right? So we see price has just generating liquidity, right? We run all that liquidity and we start to pull back to this point, right? Now, a lot of people can look at this and say, okay, we're bouncing off a 15-minute consequent encouragement. I don't want to continue taking short, especially FOMC morning. Conditions aren't really the best, yada, yada, yada. You can make a big case for why you wouldn't want to continue with a short bias down to take this low right here at that one level. However, once that SMT gets put in and I look at the bigger time frame, it looks pretty clear to go ahead and take a short in my opinion, right? So there's two ways you could have traded this, and I don't think either is really wrong. My favorite way would have just been to take low-hanging fruit. So it would have been after we see this SMT get put in. Now we have two SMTs validating the bias, right? And we also have bigger time frame draw right here, and then we have a little bit of an internal model right here where I'll go ahead and mark out. I'm gonna take that off and just replace this with the low that we're targeting now. So right about here. And then I'm looking to go ahead and see this now buy side of the curve with manipulation, which goes external. This is external manipulation within this smaller range right here. But hold on, let me take this arrow off really fast. Yeah, so this is external manipulation right here, external SMT. And then I want to see now this becomes sell side of the curve to now go ahead and take this internal draw, and then also go ahead and take the external draw because it's just so close, right? So you simply have to wait for that change of the state, and you like to see a little bit of displacement, but you don't really have to if you don't get it. But in this situation, I probably wouldn't have been able to hop into this trade. I usually would have waited for this candle. That looks good enough for me to now be confident that we're displacing. Then I wait for a pullback. But if you decide to hop in on this actually was a pretty nice 9:30 opportunity, or not 9:30, but 9:50 macro. Yeah, this is right on macro time too. So really nice opportunity down to this low. Take this low out too. Then if we go ahead and we draw in standard deviation, I think this was even more dangerous because that was pretty aligned. Yeah, that would be max TP for me, 2.59. That looks really clean. And if you wanted to go ahead and leave this, if you were really confident in leaving it for runners, I mean, the world is pretty much yours in the way you decide to trade this until FOMC. So yeah, understand as well. We're going to get into the FOMC in a second, but understand how that comes up and it stops all the previous traders out too. Like, just recognize the market's manipulation. Like right here, we came up and took this internal high, right? But that's something that's like, at the time, looking at this, it's showing you that the market knows where the orders are, right? It knows where the positions are resting, where the stops are resting, all that stuff. So when we see that FOMC manipulation, and then we see the run in the opposite direction, that's showing me that there's now a really, like, the market knows. Like, it's just kind of cool to look at the market and understand, okay, you are watching this shit now, right now, go ahead and manipulate, and it knows, right? Like, so it's cool to see how the market pulls back to previous positions, stops, entries, all that good stuff, right? So now let's get into the rest of the day. The rest of the day was literally just chop until about 2 p.m., right? So 2 p.m. New York time, 11:30 or 11 for me, we start to see a little bit of a move. So typically with FOMC, there's 2 times the price can make its move, and it usually makes its move in the second one, but today it was the first one, right? So 11 a.m., right when, or for me 2 p.m., right? Right when FOMC, I think it was the FOMC conference begins, that's when, the very first event, right? So that's when we could potentially start to see manipulation and distribution. Or if you wait and you don't get any kind of move at 11:30 or 2:30, when the actual rate gets released and Powell starts to talk, that's when you look to see a lot of movement, right? So the big movement happened today on the first one, right? So quickly clearing this up a tiny bit, right? Lows taken, all that good stuff. Boom, boom, boom. Drawing in that initial turtle soup level, right? This, understand the model right here, right? We're looking to now take this model to these lows, and we're getting, if we see turtle soup on that, and now gives us confidence to go ahead and push lower. So understand and check out ES over here. After we do all that, right, we end up coming in and creating turtle soup, right? We pull back right to, I believe, some kind of equilibrium of the range. So just quickly drawing that in. Yeah, we pull back to equilibrium of the range, OTE, tap that, tap the 1 hour for value gap right here. That's been, actually this one did get tapped, did it? Yeah, this one got tapped. So we make turtle soup on that level, and then we place in an SMT there. So zooming, I'll zoom to like 5 minutes, right? So 5 minute time frame, we come up and we make turtle soup, and we make, what's it called? SMT on that level. So boom, right here, SMT gets placed in, something like this. So now we have a really clean SMT, and we're starting to get a push lower. So this is right at 11, by the way, too. 14:05 this started, so 11 starts and starts to just push higher, and then we see a little bit of an initial sweep at this level. This now becomes internal sweep or stop rate, whatever you like to call it. Drawing that out right there. Now if I start to see displacement lower, I can look to go ahead and get involved right here. So however you want to trade this, if you want to get in on ES or NQ over here, I think you could have rode this a little harder than you could have on ES over here. So the best trade from FOMC was right at that 11:05. We start to see that push lower. There's really not much displacement until you get a pullback unless you traded ES. So this would have been the more secure trade right about here. In your R, you would have had a target down here, so you wouldn't really have gotten a nice R on that. But over here on NQ, you have much more targets, and it looks a lot better to go ahead and leave. Yeah, you have a lot more targets, so all that good stuff. So you could have left runners to this for just a 1.57, or right about here. Or where was this? A 1.82. That was pretty clean. And if you want to go ahead and draw standard deviation, I believe all of them get hit. So right here, standard deviation, actually, no, I lied. Just 2 to 2.5 gets hit. So if you want to leave this for right here, I think that was pretty good in my opinion. 3.66, that's a really clean setup if you want to go ahead and trade that. It was pretty efficient too. But I want to talk about this, right? I was watching biases and the market. I can tell a lot of people get tripped up here, right? We have the bigger time frame bias, and we see the manipulation at the highs, and we're now expecting to go ahead and take that bias or take that low out, because that's what we're expecting this to be bigger time frame sell model, right? So buy curve up to here, and then we start to see displacement lower, now validating us to go ahead and take sell or expect sell model all the way down to this low, right? That's what we're expecting when we look at this chart. So now this becomes SMT turtle soup. We look to go and see that sell model get delivered onto that low. So check this out. once we zoom lower and we see the structure that starts to look like manipulation, higher, right? Distribution. Now, even if we don't go ahead and take that low, at this point, a lot of individuals are assuming this to now be manipulation internal sweep. And then this just simply becomes your manipulation leg right here that we look to go ahead and see get displaced through and then pulled back to, and then we look to see that continue higher back up to all these highs, right? If that was your bias, this is why that was wrong, right? And as well, if you want to take that on a 1 minute chart, you would have gotten stopped out because 1 minute change happens here. I believe it happens, yeah, on both indexes. It looks like it has a lot of volume until 11:30 hits, and then price just reverses flat at that point, right? So we have change of the state right here. I don't really know. You wouldn't have gotten really good RR if you want to set your stop at an internal low, something like that. You could have maybe squeezed out a 2 RR, something like that. But the reason this doesn't work is because even though on the 5 minute, this looks like it's going to be really clean to go ahead and run like this and then continue trading the highs, right? That looks really clean. So taking the 1 minute isn't the worst. There's two reasons why that trade doesn't end up playing out, like narrative wise. So the first that I want to look at is simply this. I'll pull over here, right? So understand this. At this point, the market has not shown a reversal in order flow on the 5 minute chart. So that's what I'm looking at, right? Even if you want to check out the 15, I think 5 minute was the cleanest. Maybe 3 minutes clean as well. Yeah, 5 minutes cleanest. So at this point, once the market, understand this leg, right? This is the previous leg of price. If I expect the market to continue lower, the market in its bear trend can go anywhere within this entire leg and still be held up by something to then continue lower. So that's why if you go ahead and take shorts, right, and you set something like this, your stops get right here. That's why this stop is not the best, because price can go ahead and stop you out and the model is still valid to go ahead and push lower, right? So just understand that at this point, I think it was really cleaner on ES over here. Yeah, so at this point, when we pull back, what are we pulling back so deep for, right? We're pulling back to tap the breaker block right here. So breaker is right here. Pull back to tap the breaker, right? To tap the fair value gap, to tap the inverse fair value gap, to pull back to equilibrium OTE of this leg into this fair value gap. Understand that even though we didn't immediately react off of this fair value gap and we even closed above it, we're still being held on by those order blocks. So that's simply just price having that a little bit slower of a downtrend where it then supports itself. Order blocks supports itself once again to go ahead and take another low right here. This becomes order block right here. Price pulls back, supports itself for a move lower. All that good stuff, right? That's what price is doing. That's what price does, right? It's just simple to understand that and really get a good look at it, because at the point, right, price is still supported. That's the biggest idea, right? To not predict where the market's going to go, but simply just react to it. What is the market showing me right now? Where is, like, what do I have to see for the market to invalidate order flow? And that's the second thing, is that when you look at this leg, the way I like to trade models is to understand, I look at the time frame that it's the clearest on. So I don't do time frame alignment where it's like we tap into 1 hour PD, right? I go to 5 minute, right? I don't do any of that stuff. What I do is I look for where the model is the cleanest, right? So if you zoom to the 1 minute chart, this is going to look a little bit dirtier, right? Where, like, if I wanted to validate along, I would need to see a lot of this whole imbalanced leg get ran through before I look to take a long, and then I would trade it up to all the way up to these highs. So instead of trading that all the way on the 1 minute chart, I just simplify it to the 5 minute chart, and I say, I want to see this order flow get reversed, this could become change in the state before now validating me all the way back to this high right here. That's what I say, right? So understand that when you see a leg like this, it's not wise to take a trade before that manipulation leg gets confirmed as the manipulation leg. We see distribution past it, because that's when we validate the model, right? So what I'm saying is right here, taking the short or taking the long at this point to this high isn't valid, because the model is not on the 1 minute. The model, the real high confluence model is going to be on the 5 minute or the 15 minute. So I'm waiting to see the 5 minute chart validate the model with the change of the state with displacement before I look to take any kind of longs of it, because my idea is simply just an idea until it gets validated by the market, and then it's something that I actually want to put money behind, right? So understand that same thing. If we go ahead and look right here, this is a pretty clean long setup right here. Like, this was 1 minute change in the state. I mean, if you want to get pulled back to fair value gap and then you expect price to continue higher, that wasn't that bad. We just swept sell side. I mean, price, it doesn't look that bad. We have SMT, external SMT at that point. Like, it actually looks pretty good if that's something that you want to go ahead and trade. But it doesn't work, because if you look, the high confluence model is not on the 1 minute, right? To trade the 1 minute model would mean that you have to pretty much call the bottom. To trade this model all the way up to this high means that you have to call the bottom of the start of the 5-minute move, because when you see that price move higher, we're most likely going to get a change of the state in the 5-minute. Then we're most likely going to get, with that 5-minute change of the state, validates us to all the way to those highs, right? So understand, when you take that 1-minute trade, once we sweep bigger time frame sell side, to take that 1-minute trade is not smart, because it's like calling the bottom of the stock market. It's like calling the top to the stock market of a huge daily bull trend. You call the top of it. Like, that's pretty much what we're doing. It's stupid, right? It's calling crazy reversals before they're actually validated. So the only time that end now becomes valid is, look, once we sweep that and we get 5-minute confirmation, we get 5-minute confirmation, that's when it looks pretty good to go ahead and take a long. So 5-minute happens, zoom into maybe 1 minute. I don't expect to get a whole lot. I think 30-second would be best for this, actually. So 30-second right here. Yeah, so 30-second, yeah, it actually doesn't look bad. So we see displacement, we leave relative equal highs right here. This now becomes a point at which I want to see price return to, as well we have bigger time frame buy side resting right here. That gives me context. After I see pullback, taps the 5-minute change. Now I look to see displacement past change of the state. Boom, I can enter on the change of the state for an okay risk reward right about here, taking it to this high. I mean, it would have been okay, and then you can look to leave to this high, which wouldn't end up getting tapped. Same exact setup over here. I believe the 15-second might have been a little bit clearer. Let's just quickly check that out. So 15 seconds pretty much giving us the same exact thing, but I mean, that's the moral, right? It's like understanding that we have to see the time frame that the model is on, the time frame that the model is actually on, validate that the model is ready to go before we look to take a trade. You don't want to take those premature trades where you're taking a 1-minute long right here while we're still in 5-minute bearish order flow, right? You just take a long because you see a 1-minute break of structure, and that 1-minute break of structure simply retraces into 5-minute value gap or retrace into 5-minute bearish order flow, right? But you're taking a 1-minute long because you don't have narrative and bigger time frame context behind it. That's why this long didn't look too bad, and it wasn't the best choice, right? And as well, another way that's not really the best, but it usually happens with the understanding of narrative, is to simply just look at structure. Like, it's pretty much a rule. Like, it's like an unknown market. I mean, it's known, but it's really like a market rule once you get into this stuff, is that if price wants to move higher, so say price direction is to move higher, every time price moves higher, it's going to move quick, right? Very quick. Then when it starts to pull back, it should move slower and then move quick. And it moves slower, it'll move less quick. Like, that's why you see retraces move half the distance that the actual up move moves. So what do you want to trade, this small choppy retrace or the big up move, right? That's simple trading concepts. So it's simply recognizing right here, this is not as much of a choppy, or this is more of a choppy slow move compared to the other direction. So the other direction is very quick, literally like 3 candles, 3 up candles in this huge down leg. When I see this slow choppy action, I'm expecting to see a similar move to here, just copied and pasted right here, because I understand price resistance with liquidity. So that's why, right, when you see that displacement, I mean, this was a really nice short. So this is what I was talking about earlier, right? Retracing to 5-minute bearish order flow, and then we still look to see that displacement, and then you can get tapped right there, pull to here, and then I want to check out, I think I already checked it out, but yeah, this standard deviation right here, you could have just pretty much bottom tick that at a 3R. You wouldn't have gotten that full TP if you traded this to here, because ES already took that level, so that created some kind of bear or bullishness in T right here. So I mean, yeah, overall, I mean, I think this is a super interesting day to just analyze price and understand that kind of like we need to wait for more information before we go ahead and we take a position on price, because a lot of people think they're forced to trade when the real answer is just stepping away, because you have to have confidence in yourself as a trader that if the market direction is clear, you should be able to tell it within 10-30 seconds, right? You should be able to look at the chart, do your top down quickly and be like, yeah, I'm pretty bullish, this looks clean. And if you can't say that, then you have to understand that either price is going to be very complex, and when it's complex, it's usually not going to be the highest probability. Go ahead and move price in the direction. So you don't want to be trading those low probability setups because they're not high probability, right? I'm literally simplifying this shit so much, right? If it's not simple and it's not clear, it's usually going to be low probability. You don't want to trade low probability. So if you understand that it's not clear, you know, I can usually recognize when price is high probability. I can't recognize it right now. I can't recognize the direction easily, so it's probably gonna be low probability. I probably should just step away. So that's why, like, right here, I'm not taking this position, and I wait until I see this position, because I want to see price validate it. I want to see all my triggers get hit. I want to see this time frame align, this time frame align, this line, news align, this line, this line. I want to see all the things align until I get all the information to go ahead and take a trade. But sometimes that won't happen, right? Sometimes price won't align everything. It'll align 99% of things, and then you have to decide, am I going to be a little bit like, am I going to be picky and then not get an entry, or should I be not picky? Like, what should I do, right? You have to figure those things out, and that's kind of the key of like how you can start to understand like how picky you should be with trades, and it's just really key to understanding yourself as a trader. So that's the big takeaway from today, I think, is to really wait for the market to validate it and not like take trades without information because you feel like, oh, I think the market's gonna go, or I feel like you have to take a trade because maybe it's FOMC day, FOMC's happening, yeah, I need to get involved in the action. No, wait until it's clear. If it's not clear, don't trade it because you have confidence in yourself as a good price action reader, understanding that if it's clear, it's good, and if it's good, you're gonna trade it. If it's not clear, it's bad, and you're not gonna trade it. That's simple. So that's the lesson from today. Hope you guys can enjoy the video. Learn some stuff about FOMC, market maker models, how I trade, how I look at the charts, and overall, yeah. So I hope you guys had a good day, and peace out.